What's going on, my fellow wealth creators? Matty Ice here. In this video, I am really excited to break down my second real estate private money deal utilizing the infinite banking concept. I'm so excited. I literally just signed the note a couple of days ago. I'll show you guys that in a second. And we are set to close January 3rd, 2025. It's with the same exact investor that I lent to on my first deal. If you want to see the numbers and the breakdown of that, I'll link that down below. It's very similar. Obviously, the numbers are a little bit different, but it's the same type of deal. They do a lot of fix and flips, and it's just the numbers that are a little bit different. But I'll tell you guys, this is absolutely 100% without question my favorite way to build wealth right now. And it's one, because it works, as you'll see in the numbers, and it's just freaking awesome when you do this stuff right. It is a fantastic way to build wealth, especially with private money lending, because it's about as passive as you can get when it comes to real estate investing. Are you going to make as much as you might, wholesaling, or well, it might be close to wholesaling depending on your market, but as you'll see in the numbers. But can you make as much doing a fix and flip and stuff? No, but you're also not doing any of the work. Your work is in your job or your business, and also obviously vetting investors and people who are requesting to borrow money from you. You're going to vet that. You're going to vet the deal, but you're not doing any of the hard work as far as marketing and negotiating with buyers and sellers, doing all the rehab work and stuff like that. We're just putting our money to work. But when we combine it with the infinite banking concept, we are literally acting like the bank. And it's just the exact opposite of how we're normally taught to build wealth, which is to go to school, get the job, put as much money into these tax qualified plans as possible. The stock market's going to build all of your wealth for you. By the time you're 65, you're going to live your golden years and all that crap. And I just don't buy into that, man. Especially now that I'm experiencing this myself, it's like, holy smokes, dude, there's just a far better way to do this. Now, it doesn't mean that you have to do private money lending, so to speak, but combining the infinite banking concept with how you want to build wealth, I think is extremely, extremely powerful. So let's get into it. I want to show you guys the numbers. I'm going to show you how much I'm lending out, terms and conditions, interest rate, all that good stuff. But then we're going to run some numbers about what it looks like to borrow against a high cash value, dividend paying whole life insurance policy at a certain interest rate, and then lending it out at a higher interest rate plus points. We're going to look at those numbers, because that's exactly what the banks do on a regular basis, guys. So if you are interested in learning how to become a private money lender, I will link down below in the description to the exact course and training that I took. It's really cheap. There's a discount code for you as well in the description, guys. It is absolutely worth it. My first deal more than covered the cost of the course. But here's the thing. What's so important about both private money lending and infinite banking and using dividend paying whole life insurance is the education. You have to educate yourself. You have to understand and know what you're doing. You don't necessarily have to be an expert in everything to get started. I certainly was when I did my first private money deal and did my first policies. I learned something new every single day about this stuff, but you have to have a really good foundation about how these things work. Otherwise, you could end up causing a lot more problems for yourself. All right. So just make sure you educate yourself. This stuff is not complicated, but you need to know the basics, all right? And the training I went through step by step from start to finish, exactly what you need to know to become a private money lender. So I'll link that down below. All right, let me share my screen. There's a few things that I want to share. First, I want to show you the note. Like I said, I just signed this a couple of days ago. Obviously, I'm gonna have to blur a lot of this out for privacy purposes, but right here, note holder MWC Investment Group, that's my LLC. MWC stands for Millennial Wealth Creator. And then we're lending out $115,000 here, all right? So we just signed the note. We're set to close January 3rd, 2025. All right, let's break this deal down. All right, second private money deal using infinite banking. All right, so I'm lending out $115,000. That is an all-encompassing loan that covers the purchase of the property as well as the rehab. All right, so this is not a full gut, like a full rehab. A lot of it is just going to be cosmetic stuff. All right, but what this means is that I'm in first lien position. All right, that is very, very important, especially when you're just getting started in private money lending. It's much more preferred to be in first lien position than second lien. All right, second lien, you'll often have people offering like higher rates of return and like higher interest rates and stuff, but you're not in the strongest position if something goes wrong with the deal. So you always want to be first lien position if you can. That's basically being the bank. Like when you get a mortgage on your house and the bank has a first lien position on the house, so that if you default, They can take possession, foreclose on the property. They could sell it and recoup all their money. That's exactly what the first lien position is. All right. So I'm first lien position. Time frame is about 4 to 6 months. My first deal took about 4 months. So 4 to 6 months, give or take. That's usually the time frame for this investor group. Terms are lending. I'm lending out at 13% plus 1 point, and this everything is paid upon closing at the end of the deal. So it's often recommended, like if you go through the course that I went through, they recommend getting like collecting monthly interest payments, collecting a point up front and stuff like that, especially if it's a newer investor that you're working with. I'm not doing that though. And here's why: because the investor that I was introduced to has such a phenomenal track record of success. He's never defaulted on a loan before. He does tens of millions of dollars in real estate, dozens of deals every single month. It was a personal introduction by somebody that has lent him over $1 million successfully and done very, very well. So I'm going to make it as easy as possible for the investors. And for me, I don't really need the cash flow on a monthly basis for the monthly interest payments. And I'm just okay getting everything on the back end. That might not be the case for you. You have to determine how you want, like what kind of terms you want. Remember, you're the bank in this scenario. All right. So you dictate the terms. But sometimes it's good to compromise as well, or potentially, anyways. That doesn't mean you should just because they have experience. But if you are starting to work with a very experienced investor and it's easier for them to pay everything at the end, I would rather just do the deal, and I'm totally okay with that. It's exactly how I did my first deal. So everything will be paid upon closing at the end of the deal. All right. And 1 point is just 1% of the total loan amount. So it'll be $1,150 in addition to the interest. All right. So here's where the infinite banking concept comes in. So I'm not lending out my own money here. All right. So what I'm doing is I'm borrowing from my high cash value, dividend paying whole life insurance policies that I set up a while ago. The loan interest rate on that policy on the policy loan is going to be around 6%. But I'm lending it out at 13, guys. That's over 100. That's a 7-point spread. That's over 100% rate of return. You'll see what I'm talking about when I run the numbers here. But this is exactly what banks do, guys. They pay us a certain amount of interest on our checking or savings account, which is historically pretty low. But then they lend it out. Let's say they pay us 1%. They lend it out at 4, 5, 6%, whatever. They're making hundreds of percent rates of return on that. Every single year on every single loan, whatever. That's why they have the nicest, biggest buildings in every single city. All right. It's because they get these massive rates of return by leveraging other people's money, our money. So all I'm doing here is mimicking exactly what the bank does. So that's why when people ask me, well, why would you pay interest to borrow your own money? Well, I'm not. I'm borrowing the life insurance company. My money is still compounding, getting that uninterrupted compound growth in the policy. I'm borrowing the life insurance company's money at 6%, and then I'm lending it at 13% plus 1 point. I'm going to do that all day long, as many times as I possibly can. That's exactly what the banks do. All right. And here's the thing, with this particular deal, I still have plenty of cash value available in my policies just in case something comes up. If an emergency comes up, I'm not completely tapped out. I still have cash value available for another opportunity if something presents itself. You don't typically want to max out a loan against your cash value. You want to leave yourself some wiggle room. So, for example, if I have, this is a $115,000 loan, I wouldn't want only 120,000 or maybe 117,000 of cash value and borrow 115. I suppose you could do that. It's a little more risky though. You got to be careful with that. So make sure you give yourself a little bit of wiggle room. But anyways, those are the details of the deal. But what I want to do is break down why I'm using infinite banking for this and then show you the actual numbers. Like I said, this is exactly what banks do. They pay us 1%. They lend it out at 4 or 5%. And here's the question is it worth it for them to pay us 1%? Like, are they complaining about paying us 1, 2% when they're lending it out at 4, 5, 6%? No, they're going to do that all day long, as many times as they possibly can, because that rate of return is absolutely insane, especially, for banks when you're talking about billions of dollars there, right? So it's absolutely worth it for them to do that. So it's absolutely worth it for me to borrow at 6 for my policies and lend it out at 13 plus a point. Now, here's another scenario. What if I lent out the 115,000 from a checking or savings account? Is that money still growing? in the checking or savings account. Let's say my savings account's getting 2%. Well, if I take $115,000 out, that money is not earning any interest anymore in the account. It's earning interest on the deal, sure, but with infinite banking, we're earning money in two different places here. The policy is still compounding because my money is still in the policy. All right, so I'm getting that uninterrupted tax-free compound growth, and then I'm making a spread over here. Not to mention, again, this isn't just about the rate of return. Does this checking or savings account offer a massive income tax-free death benefit to your loved ones? Does it offer that level of financial protection to your loved ones while you're doing your private money deal? The answer is no. Whatever's in the checking account is what gets passed on to your loved ones, minus taxes, probate costs, and all that stuff. But in addition to the wealth building opportunity that I'm taking advantage of here, I am also providing a massive amount of financial protection to the people I love in case something unexpectedly happens to me and I pass away, unfortunately. That's life. That happens, right? So there's just so many benefits of implementing infinite banking because of how many problems it solves and all the different utilization that we get from it, right? So that's why it's one of my favorite strategies here. So it is, in my opinion, it's far superior to do infinite banking with private money lending, lend out from my or borrow against my policies, lend that out, than if I were to have it in a checking account and then I lend it out there. Now, I have an interest expense, obviously, but to me, that is a very, very small price to pay to have my own banking system like this and to get all of these benefits. So small cost of doing business, guys. The example I like to give, the analogy, and then we'll get into the numbers here, is like there's a piece of software in my business that I pay, it's $500 a month. That's a lot of money for one piece of software in a business, right? But if that software is allowing me to earn $10,000 a month, is it worth it for me to pay the $497 a month? Absolutely. Every single month. Why would I ever cancel that, right? To me, it's very similar with regards to the interest cost when we borrow against our policy. That's a very small cost of doing business to earn uninterrupted compound growth in my policy and be able to build wealth like I normally would. It's awesome. All right, so let me pull up the calculator here. Give me 1 second and we'll run some numbers. All right, here we go. So let's figure out all of our let's figure out net profit, rate of return, and all that good stuff. All right, so we're lending out at $115,000 at 13% interest. Okay, now let's assume that the deal takes 4 months like it did last time. Okay, so on an annual basis, it'd be just under $15,000, but we need to divide it by 12 because it's a per annum loan. So they are paying $1,245 every single month in interest. Let's say, again, the deal lasts 4 months. So they're going to pay a total of $49.83 in interest. Remember, we do have the points as well. So we're going to add 1,150, okay, because that's 1% of the total loan. So at the end of 4 months, assuming that's how long it takes, I'm going to make a gross profit of $6,133. Not bad, right? But I do have the interest cost because remember, I borrowed against my policy in order to do this, right? So we need to calculate that next. So we're going to do 115,000. My interest rate is roughly like right around 6% right now. All right, so we're going to let's divide it by 12. We're going to times it by 4. So our total interest cost for this in this example is $2,300. Okay, so we need to get our net profits there, and then we can see what our rate of return is. All right, so 2,300. What was our total there? So 6,133 minus, so that's our gross profit minus our cost of doing this deal, which is the simple interest that I pay on my policy loans. Okay, and then so my net profit is $3,833, which if I divide that by 4 months, that's $958 a month in passive income that I generate in my business. Like, that's pretty sweet. How many rental properties do you need to own to create a net profit of $958 a month? And how many headaches does that come with? Far less than when you're doing private money lending. I'll take a passive $958 a month all day long. This doesn't even include what my policy grows by during the same time frame as well, guys. That's such an important part to remember, is that my money is still getting uninterrupted compound growth in this scenario, in the policies, because I'm using the life insurance company's money. Now, what's our rate of return here? It's divided by our cost. because our only cost of doing this is the simple interest. That's it. All right. So we got 100 times 100 to get the percentage. That's 166% rate of return, guys. Like, you know, what about this does not make sense? Like, it's the pushback I always get for this is, why would I pay interest? Why not just lend the money out by itself, like from a checking account? Why even incur the interest cost? This is why. 166% rate of return. My money is still compounding in the policy. I have all the other benefits of the policy. Why on earth would I not do this over and over and over again? It's just like if you were to go to the banks and say, hey, why do you pay people 2% to deposit money so that you can lend it out? Why don't you just lend your own money out? Because when you leverage other people's money, your rates of return are significantly higher. You're able to profit a lot more. That's why they do it, guys, and that's why I'm doing it. You know, because if I were to so 115, let's go back here. 115,000. Whoops, no, I want times 0.13. What was our gross profit? That's actually what I need. Okay, 61. Let's see what our gross or our rate of return for this deal would be if we lent out our own money. So our cost would be 115,000, because that's what like we're using our own money in this case. All right. So my rate of return would be 5% for that deal versus 166% because I leveraged somebody else's money. My money is still safely growing in the policy, right? I'm going to do this all day long, guys. For me, there's just no better. I'm not going to say there's no better way to build wealth. Obviously, everybody has their own way of doing it. For me, I'm saying this is my favorite way to build wealth right now. So with that said, I think let me go through my bullet points, make sure I didn't want to cover anything else. Give me 1 second here. All right. I think that was it. So I just wanted to break down the details of the deal. I wanted you to see the numbers when using the infinite banking concept, why it makes sense. Maybe it doesn't make sense for everybody. I don't know. I really like making insane rates of return, earning passive income, having money growing in both places, getting massive benefits from the policies versus lending out from a checking, savings account, retirement account, whatever. To me, this just makes a lot more sense. But what do you guys think? I would love to hear your feedback. Drop it down in the comments below. Also, make sure you check out all the links in the description. Lots of additional tools, training, resources to help you along your wealth building journey as well. Hope this was helpful, guys. And make sure you subscribe so that when the deal is done, I'm going to run a full breakdown from start to finish on exactly how it went. And then we'll go from there. All right. I will talk to you in the next one. To your success. Matty Ice is out.